Good morning, traders. Welcome to the Pirate Traders live stream. My name is Charles Goff. We are going to talk about the ES and the NQ today and how we might find some opportunities to make money as day traders. So please stick around and we will give you our scenarios. So everything we're looking at right now at this very moment looks pretty bullish. Okay, the market has been in what we call a slow melt to the upside. A slow melt basically implies we are making higher highs and higher lows consistently on a daily time frame, but intraday we're doing a lot of sideways balancing. That's a form of balance. Okay, it's just a sign that the market wants to go up, but it doesn't quite have the confidence yet to do that. It isn't quite convinced it's ready to go make a big move to the upside. So it kind of just slowly melts its way higher. Well, at the end of the day yesterday, we left behind several important levels that we want to pay attention to intraday today. First off, we left behind a set of a base of spike up. Okay. A spike is a move the market makes in the last hour of the day, and the start of that move is often the sign the next day if the market is going to go up or down. So if the market comes in, fills the gap today, and stays above the base of that spike, it should continue higher today. And the target becomes getting to the overnight high around 60.74. Okay. Lots of resistance before we get there, so it won't be a straight line, but that is the eventual target for the market today. If the market comes back into yesterday's range and it doesn't find support at the base of the spike, that is a sign that it needs a larger pullback, that we're not quite ready yet to have this momentum to the upside. So the first thing that we are looking for now that the market is open is for a gap fill, the market to get to yesterday's high, which is at 60.49. If it cannot get to yesterday's high, that is a gap and go. That is the most bullish scenario. If it does get to yesterday's high, we're asking the question, can they stay above the base of that spike? Okay, so if they fill the gap, can they stay above the base of the spike? If they do, it is bullish. If it cannot, so if the market fills the gap, which it looks like it's about to, if it fills the gap and then it starts to spend time and it starts to break the base of that spike up, that is a sign the market needs a larger pullback before it'll be ready to go higher. Okay, that would tell us CPI was not enough to create this momentum to the upside, in which case the next important levels are the weakness that we left behind yesterday. We left behind 3 weak references yesterday. That is a lot of weakness, right? Each weak reference makes the magnet stronger and stronger. So if we cannot, well, here you go, you filled the gap. So at this point, if we cannot stay above 60.45, there's a very high probability we are heading to 60.30. And then we monitor for continuation lower from there. So if we get to 60.30, we may find support and turn around and come back up. If we don't, we're going to 60.23. When we get to 60.23, we may find support and come back up. If we don't, we're going to 60.15. Okay. Okay, well, there you go. Base of spike just broke. So that tells us we are not going to get a gap and go this morning. We are not going to go straight up. All the bullish momentum is gone. So this increases the odds. We need to pull down to 60.30. Okay. Again, not going to be a straight line, but that's where we're going, is 60.30. It might be that that's all we need. We just need to repair 60.30, and then this thing turns around and comes back up. So keep that in mind. There's a lot of support right here, and that might be the low. Only with new selling down there do we assume it can keep going. What I was about to say, though, is with the combination of the one-time framing on the daily, right, the higher highs and higher lows each day, the spike up at the end of the day yesterday, and the gap up this morning, I would say there is not as much of a chance that we'll break yesterday's low. I'm pretty confident we will stay above yesterday's low, above 6,005. So the pullback today, which it now looks like we're going to get, is just to clean up some weakness, to find some buyers, to turn around and keep going higher. Boy, that happened quick. Didn't even have time to explain. Explain in the membrane. Explain in the brain. Explain in the live stream. We are public on the public YouTube, so if you could smash the like button, I would really appreciate it. That will help to encourage the algorithm to send some new people our way. Always trying to expand the community and get different insights. So if you could hit that thumbs up, I sure would appreciate it. Okay, so once again, the way we see it is that the market needs to, and not right this minute, but over the hours ahead, the market needs to come back to 60.30 down here. There's a lot of support, so we're going to probably bounce and bounce and bounce and bounce and bounce before we get there. But that is the target to the downside right now is 60.30. The thing that would get us bullish again and get us thinking the market could go higher is either passing through 60.30 and then finding support and turning around. That would get us bullish. Or if the market doesn't get to 60.30, it gets back above yesterday's high. It gets back above 60.49, and then it starts to get new buying up there. So one of those two scenarios has to take place for us to become bullish. Until that, we assume we're coming back to 60.30. Okay. I'm seeing that the ticks are very, very overbought right now. So that implies we need to keep poking at support until we can get those ticks back to the zero line and see if there are buyers. So I'm putting up a banner here that says I'm feeling bearish. Again, please note that is only very, very short-term intraday to get to 60.30. For me to be bearish beyond that, I would need to see new selling. And of course, if we get back above yesterday's high, I will no longer be bearish. Good morning to Rich, 365, Will, Sook, Arjit, DNK. DNK says, gap and go morning to you all. Not quite. Almost. Jay in the house. Good morning. Let's make some money in the trading paradise. Trevor is here. Good morning to you. Percy in the house. Groko, good morning. Pitter, good morning to you. Kevin is here. Nap in the house. TF. He says, can you explain the week low at 60.30? Yeah, that was the M period low, reversing at the C period high. Bam, 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 bam. Okay, so here's where we are looking for resistance. We've got a low volume node right here at 40. Well, there you go. It's getting backfilled as we speak. That is where we expect the sellers are going to start to pile on and take another poke at the lows. If the market gets back above yesterday's high, we flip back to neutral and look for more information. So we are looking for the sellers to smack the market down right here, right now. Dun dun. Dun dun. In the city, we must fight to survive. He sold tortillas on the corner. Man, we're dancing right on this halfback. Let's take a look at the NQ, see what that one's doing. Okay, so the NQ is finding support right around their base of spike up, so that is less bearish on the Q, but I'd say it's in the exact same scenario as long as they are below yesterday's high. 21, basically where we are right now, that is bearish, and it becomes neutral if they get back above. Got some major tug of war here at yesterday's high. We always like to see these moments where the market is playing tug of war like this, not because we can predict which way it'll break, but because once it does, we know it's going to get some follow through. Once again, there's 90 people hanging out, only 30 likes. If you don't like me, give me the thumbs down. But if you think I'm an okay guy, give me that thumbs up. Okay, so the next poke down with price should be enough to get the ticks back to the 0. Then we'll have a better idea of who's in charge. Man, we hate these volume cliffs like this because we know it's bots. We know it's computers. One computer somewhere is playing tug of war with another computer somewhere else. And whichever one breaks, the market moves in the direction of the other. Good morning to the Hemp Chat and Olive. Thank you guys for the thumbs up. Appreciate you. James says, would right now be a good short? Right now is a good short in terms of risk to reward. In terms of probability of success, it's pretty uncertain. It's about 50-50 right now. So, like I said, as long as we are inside yesterday's range, as long as we're below yesterday's high, the highest probability is that we're heading to 60-30. Not right this minute, but today we're heading to 60-30, right? So if you got short right now and you had your stop above yesterday's high, right? That's less risk than your potential reward. And so it is a good trade. But while you're dancing, while you're doing this tug of war, right? There's uncertainty. And while the ticks are still just trying to get back to the 0 line, there's uncertainty. So you don't have confidence that it'll work on probabilities, but you have a good setup in terms of risk reward. And so you just make the decision. You know, am I at least confident enough to get into that trade? Okay, so we're pushing into support here around 60, we'll say 60.35, 60.34 area. And the ticks are now back at the 0 line. So if the buyers are going to recover the market today, this is their chance. And we should see a bounce in price and we should see a bounce in the ticks. If we do not see that, we're heading to 60.30. And then the next potential support is going to be 28. Actually, I would say 27. Okay, so earlier this morning, when the market tried to get back above yesterday's high, the halfback was holding as resistance and was preventing it from being able to get up there. So now we're looking for that same thing again. Does the halfback, which is currently at 60.46, become resistance for continuation to the downside? James, I only read the first part of your question. He says, is now a good time to short? And then he followed up with, as the ticks get back to zero, and I missed it. No. So any day where the ticks open like way overbought, it is not necessarily a good short, because what the market can do is it can just go sideways. So it can just grind and grind and grind and grind and grind while the ticks work their way lower. So that alone is not a reason to short. You would want to see something else like the market re-entering the previous day's range or something like that. Okay, so now we're watching 60.47 for resistance. Can the sellers who have just taken control of the market, can they remain in control? If they get resistance here, then they remain in control. Croco says, Charles, expanded blocks speaks for itself. But how they wonder, are you able to read the composite profile where the letters are stacked? So you can't tell right now because we're just in the first 30 minutes, but the actual intraday that I'm trading, I have both. So I have one composite profile that smushes everything together, and one where it's elongated out and you can see each individual 30-minute time period. You won't be able to see that till the C period, but that's the way I do it. And it is because I get information from both. Okay? So if I want to see weak references, I want to see it expanded out, because it's very hard to see weak references when it's all collapsed like this. But if I want to see potential reversal levels, potential support or resistance, I want to see it collapsed, because that's where I can see where the market, spent the most time. And that's very important. So the simple answer is you want both. Okay, no resistance at halfback. That is less bearish to see. Okay, back to neutral. But Charles, you promised it was going to go to 60.30 and it didn't go there. The ticks bouncing on the zero line when they pulled into support is a sign of buyers stepping in. So this to me is not bullish yet. It's not like this market is going to the moon, but it takes away the bearish sentiment, right? Remember, if they're going to come to 60.30, they got to stay inside yesterday's range. If they bounced the first test of the zero line, then the sellers are not in control. So I see it as back to being neutral, back to being two-sided trade, and I'm now expecting some chop in here, some grinding around yesterday's high. If they can turn yesterday's high into support, I will become bullish. Okay? Or if they can get back above the opening price, then I'd be bullish. But my guess is we're going to spend a bit of time in here grinding. So now that we're on the previous day's high, I'm watching these ticks. A move higher from here is a sign of buyers stepping in, which is bullish and increases the odds will pass through the opening price. If the ticks push back down to the zero line from here, it means we need to spend some time grinding around yesterday's high. So let's mark on the chart where the ticks were when we got to yesterday's high, and let's see where it goes from there. That way we know, are we bringing in buyers up here or not? Good morning to Oh Boy, Willie T in the house. DNK says it bounced off the overnight POC or VPOC. It may have bounced real quick, but it did break through there. Okay, so those ticks are going higher. You know what that means. Instantly switching from bullish to bearish. Or sorry, from bearish to bullish. So now, the same way, earlier I said I'd be bearish as long as we stayed below the previous day's high. I will now say I am bullish as long as we stay above this node right here, which is just a large node that will likely act as support when the market pulls back down. I don't think we're going straight up. I think we're going to grind for a little bit here. But as long as we stay above this node, I think the higher probability is a move to the upside, because these ticks are showing us we keep bringing in more buyers. So each poke down is bringing in more buyers. Eventually, the price will follow. Okay, must be getting some news numbers right now. We got a little tempo change there. The fact that we just pulled the value area up against the high of the day increases the odds of the market going higher. When you see the blue box right up against the high, it's a sign price needs to poke up there. That's bullish to see. Okay, so moment of truth for the buyers. We are now looking for a bounce once again here at 47. If the buyers can stay above that node, they can keep the momentum going for the rest of the day. We could start one time framing. We could get to the overnight high. We could even go way beyond it. But this is the moment where the buyers have got to actually hold a support level and defend it. So looking at Bookmap and the liquidity, it's feeling like they want to spend some time grinding right on yesterday's high. They just want to keep grinding and grinding. They want to get as many people long and as many people short as they can before they make whatever move they're going to make. So what we're looking for is something to suddenly change with the order flow. Does one of these two larger nodes suddenly disappear or suddenly get much darker, much more volume added to it? That change will tell us which way the market is going to break. We've got like volume cliff, and we're just grinding between them. DNK says, can we look at the queue? We can do it just for you. Okay. So obviously very similar to the ES. Same idea. Opened with a gap up. Filled the gap. Pushed down into the overnight range. Looks like they had a pretty nasty liquidation there. Yeah, so I literally see the NQ is exactly the same as the ES. To me, it feels a little more bullish right now, like it wants to go higher today, but it's really all about this tug of war at yesterday's high and which way it breaks. If you wanted to have an overabundance of caution on the NQ, I would say don't look for any trades as long as the market stays above 21,960. Yeah, 21,960. And below the opening price. You know, if it gets above the opening price, that's where you start to get the short covering. If it gets down below 21,960, that's where you start to liquidate again. So right now, you got the strong hand buyers that stepped in on the liquidation. They need, you know, FOMO buyers to join the party. They need those short-term day traders to join the party up here if they're going to keep it going. So both markets are just playing tug of war at yesterday's high. And like I said, while that frustrates us because we wish the market would just do what we expect right away, it shouldn't frustrate us because it should give us the confidence to know the more time we spend grinding up and down through yesterday's high again and again and again, the more of this that we keep getting right here, the bigger the break will be in an hour or two. Whenever we break away from here. You know what I'm saying? Like, what's the market going to do today? Well, whichever way it breaks away, it's going to get a bigger move because we spent so much time grinding and grinding and grinding right here. Speaking of which, I'm bullish once again, or I am bullish. So the next thing we are looking for is for the market to pass through the opening price around 60.56. And then we're looking to see, do we get short covering there? So does the market start to go like pop, 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 pop? You know, maybe 3 or 4 or 10 points up very, very quickly. Okay, just like boom, 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 little pops. If we get that, then we look to turn the opening price into support. Fighter Pilot says, quote, "We are going to spend some time in here grinding." That's what she said. I'll take it. Billy K in the house. Good morning to you. So you can see right now with this little grind that we're getting, this little mini range here, the sellers are trying to stop the market from passing through the opening price, okay, which is just a few points above us. Why don't they want the market to pass through that opening price? Because as soon as we do, everyone that's been shorting so far this morning starts to give up on those shorts. They start to change their mind. That's what we call short covering. Once we get the short covering, that can cause FOMO buying. It can cause people to start to chase the longs. So the sellers are desperately trying to prevent that from happening because that could lead to a big trend day to the upside. If we get that potent combination of both short covering and new buying. Croco says, what info do you utilize from older previous composite TPOs, poor highs and lows, single prints, value area highs and lows, halfback? Bro, you got to take my workshop. That's too much. That's too many questions in one question. It's a lot. It's like, you know, what we talk about is this concept of chunking, right? This concept of taking many different pieces of information, often contradicting each other, and combining them together to make sense of what you're seeing. So I'm looking at all those things. I'm looking at the profiles to see where the market spends time and brings in volume. I'm looking at previous highs and lows to see where the market might reverse and what happens there. I'm looking at specific profile references like the halfback, like I called support at the halfback here, and then it worked. Earlier this morning, I called resistance at the halfback and it worked, right? So there are a lot of different levels that I look at, but none of them specifically mean the market is going to do this or that. You got to combine them all together and say, what's the story here? You know? So this morning, I was bearish because we were spending time and bringing in volume inside yesterday's range. That by itself is a reason to be bearish. The fact that you're spending time and bringing in volume, and for any reason, if you're outside of the previous day's range and you re-enter, that's a little bit bearish, right? So that's why you start to get bearish. You combine that with the 3-week references we had left behind below, that further increases the odds the market needs to pull back, right? But how did the market do that pullback? It liquidated. It went very, very quickly, and then it instantly reversed right back up. I can show you here on the book map. So the first drop, liquidation. Second drop, liquidation. The first drop, when it liquidated, it got new selling. It didn't make it back to the beginning of the liquidation, so that leads to a move lower. That's a totally separate thing. That has nothing to do with, are we in the previous day's range? You know, are we above the opening price? None of that. Okay, so now we're looking for some short covering here, a few little pops, and then see if we can turn 56 into support. As long as we do, it'll be bullish to continue higher. Okay, so a liquidation break is totally separate from every other thing we're talking about. It's completely separate from where are the weak references, you know, where's the previous day's range, all of that. This is just a market mechanic. When you liquidate like that and you are able to completely retrace, remember this one could not completely retrace, so that led to a move lower. This one did completely retrace. So that changes things. Now, all of a sudden, it's not as bearish, even though we're still inside the previous day's range and we still have these weak references, which 5 minutes ago was making us bearish, right? When the market was in here, when it was inside the previous day's range and it's chopping and grinding, that was bearish. But the fact that we got the liquidation and it retraces, now everything changes, right? Now suddenly that information, the newest information, which is the liquidation break retracing, shifts everything else. We are still inside the previous day's range. We still have weak references below, but that liquidation break shifts things. So then what do? Right? Then we start to turn previous resistance right here into support right here. That is a sign of a momentum shift. So then we're bullish and we expect the market to go higher. So it's not that you take any one piece of data and you just say, this means this, this means that. You must chunk them together. You must understand, you know, what does it mean with all the information that you have available? And then as that information changes, which it literally changes minute by minute, look at from here to here was like 3 minutes. In a 3-minute period of time, the information completely changed from being more bearish to being bullish, or at least at that point neutral until we turned the resistance into support, right? So it was like, I'm bearish, I'm neutral, now I'm bullish because the information adjusts. And that's the key to trading, is always be aware of all the information that is available and then how that information is changing minute by minute and adjust accordingly. And the really cool part is, if you're doing it the right way, if you're reading the market generated information in the correct way, you understand what everything means, you know, you understand the structure of things and what you should be seeing at different levels, and then you're observing whether those things happen or not, then this chunking starts to happen automatically. Your brain just does it on its own. You don't even have to think about it anymore. So the analogy that Jim Dalton uses is like, you know, the first time that you drive a car, you know, you back a car out of a garage, it's terrifying. There's a lot you have to think about. You know what I mean? You have to figure out how to turn on the car, how to put your foot on the brake, how to put it in reverse, how to look over your shoulder, how to turn the wheel the opposite direction of the direction you want the car to go. You know, there's a lot you have to think about. And it's scary that first time you pull the car out of the garage. But a year later, after you've pulled out of that garage, you know, hundreds of times, well, then you don't even think. You literally just get in the car and you just pull out, and it's effortless. That's what happens with trading, is combining all these different things together. Where do I put the keys? Where do I put my foot on the brake? Where do I put what, you know, position do I put the car in terms of reverse or drive? How do I turn the wheel? If you keep doing these things over and over again, you keep reading the market the correct way, you have to know how to do it. But if you're doing it right and you keep doing it over and over again, it gets easier and easier. It requires less and less effort, and it becomes more just natural to expect certain things to happen. And that's when trading really kicks into gear, because then you can stop worrying about your analysis and your ability to read a chart, and you can start focusing on the execution of your trades and how you execute better and better and better. Nor Auto Trading in the house. Good morning to you. Good to see you. Sheena says, are the sellers retail or bots? Well, it's a lot of bots today, but I would say right now is where retail starts to FOMO. So from this point on, this in here was mostly bots grinding the market around. Okay. But now that we're above the opening price, if we keep bringing in new buyers, that's, not necessarily just retail. That's, real buyers. That's retail. That's institutions. That's family offices. That's everyone who have been asking themselves, is this a blow off top, or are we going back to all-time highs? Well, this is a sign we're heading for those all-time highs. We've got the momentum, even after CPI. So, that might change some minds. That might get people to take some positions. We'll, of course, have to wait and see. So we got a little bit of short covering as we pass through the opening price, but we are not getting FOMO up here, right? So that implies it's going to be another slow move to the upside, but it is bullish. Abu says, can we take a look at the NQ? Let's do. Looking bullish. Looking bullish. On the Q. On the Q. Looking bullish. Man, how long's it been since we were here? Oh, I don't even have numbers going back that far. Let me just get some of that old data to load up here. We'll give it a minute to get loaded, and then I'll give you some insights. I only track like the last month worth of data on the Q because I don't normally look at it. Okay, so we are pushing into some resistance here. We can see it in the cumulative volume. This little node right here between 60.61 and 60.64. So we are expecting the market to get a little bit of resistance there. Why? People that are long will start taking profits, and people that have been waiting to get short, this will be an area where they start to short. So if we do get resistance, we're looking for the market to pull back down towards the opening price and then see if we can now turn that into support. So far we haven't done that. We passed through it, and I guess we came back for a real quick little kiss, but we haven't truly tested it for support. So if we get resistance, we look to come back to the open. And of course, if we don't get resistance, we look to continue higher. Obviously. Still not enough data, man. All right, I'll just look at the daily. Yeah, so that overnight high is the target, and it looks like there's a lot of resistance there. Between the overnight high and, say, 22,145, there's going to be some profit taking and some sellers. So from this point, as long as the buyers stay in control, they should be able to get to 22,100. But that would be a great area for the market to run out of steam and come back down later on in the day. So keep an eye on that. But the target is the overnight high. You got some resistance around 22,063. Yeah, 22,063. Some more resistance around 22,089. And then lastly, up at the high around 22,100. On the Q. Frito says, okay, I'm out of my long. The ES is now clear for takeoff. I will say, that's a great spot to take profits. You could have maybe pushed it for another 6 points, but yeah. Frito says, yeah, I should still be holding. His long, he means. But something about the mental effect of getting your losses back from yesterday. Yes, so this is one of those debated topics in the psychology of trading, right? Of, should you exit a trade for psychological reasons or not? And so my answer to that is, if taking profits now will make you feel good because you covered your losses from yesterday, then it's always a good idea, right? Because you want to get that mental clarity. So maybe you don't hold for that extra little bit of the move that you could have gotten, but that's okay, because now that you've got mental clarity, you got your confidence back, you're feeling like king of the world, now you can buy support and get in the next trade. So yeah, I don't think there's anything wrong with that personally. We got 98 people hanging out. We only have 60 likes. Let's smash that thumbs up button. Pew, 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 pew. Smash it. All right, so I put a poll out. From here, where do you think the market is going to go next? Do you think we're heading up for that overnight high? We're going to keep the momentum going and we're going to melt our way up there? Or do you think we're going to, fail in here, break the initial balance low, and end up heading for 60-30? Where's the chat at? Let me know what you think. Wow. Overwhelming response. I should have given a third option. 75% of you think we're heading to the overnight high. Only 25 of you think this thing is going to crash to the downside. And generally, that would mean it's going to sell off. But this time, I'm with the majority. I'm with the majority right here. And only 16 of you voted? The rest of you are weak sauce out there today in the participation. Fighter Pilot says, we're live on the public YouTube. Yes, then join the brigade, take the courses, learn, and gradually change your life. Listen, I couldn't agree more. I think it's excellent advice. Thob says 60-65, then the sell-off. Whilst I could absolutely see 60-66 as being resistance because it is a base of single prints down from the past, at that moment, there's really no reason to be bearish up here. Okay? Because what do you have? You have a spike up from yesterday. You have a gap up from today. You have a market that's one time framing. You left behind single prints. At that exact point in time, you would have to be one hell of an innovator to assume it's a good time to short, unless it's a quick little, scalp short for the resistance at 66. Because at that point, not only are the buyers in control, they're now squeezing sellers and working their way higher. So I would say if I'm not bearish, but if I was going to get bearish, it'd be now before we start one time framing. Because once we start one time framing, again, that starts to change people's minds. People that were bearish start to suddenly no longer be bearish. That's just the way I see it. Mark says there is a danger to a supposed China agreement isn't an agreement at all, in which case all aboard the elevator down. Yeah, I can get behind that. This is a very emotional market, and it seems like anything China related instantly causes a 50-point move in the ES. Like anything. Just saying that they're having a phone call, 50-point move. So I could get behind that. Some bad news around the China negotiations could lead to a sell-off. But unfortunately, I can't predict that, right? So if I'm trying to make money today as a trader, I can't guess that that's going to happen. I have to just go with whatever is available to me right now. And then if that happens, hopefully I have a stop and I get stopped out. And so I don't lose money. But you are right. Any China news could cause a massive change. And those negotiations are happening. So news could pop out at any moment. But that's the fun of being a trader, y'all. Anything can happen at any moment. Mark says, people should join the brigade. I went full-time in April thanks to Charles. Best $20 a month I ever spent. Well, I appreciate that, Mark. That's the best review I've ever gotten. Doug says, I was promised free tacos and beer. Yeah, I never made that promise. Free tacos and beer? I'm not even sure how I would do that through the internet. Maybe virtually, maybe like everybody goes, gets a taco on their own, and then we meet up in a Zoom and we all eat tacos together. That's not a bad idea. Greeny says free rum to every pirate. That one I could get behind. A little rum and coke. Okay, so this resistance is holding. That means we need the price to pull back in order to bring in buyers. We are not bringing them in at the higher price. So the first potential support is going to be 60.57. That is the base of the B period single prints. So basically anything between 57 and the opening price at 56, this area right here should be support to turn around and start one time framing higher. If we cannot find support there, that is much less bullish to see. Okay, so we really should be seeing support up here above the opening price. But if not, they can still pull back down to yesterday's high, find support there, and keep the momentum going. But I suspect they got to stay above the open if they want to keep this going. And right now, to me, all indications say they will keep this going to the upside if they can hold that support. All right, so as the C period starts to work its way above the B period high, the market is now one time framing to the upside. One time framing is a way for the market to tell us who is in charge. In this case, because we are one time framing up, it is the buyers, increasing the odds that the market will continue higher. Now, that doesn't mean we can't instantly turn around and start heading lower. It just means the odds are that we are going to continue higher. Once we print the D period, which will be in about 11 minutes, all we have to do is keep the D period low above the C period low, and it will mean the market is going to keep going higher. And if we do that, when we print the E in, 41 minutes, as long as we keep that E period low above the D period low, it'll keep going higher. So the one time framing never comes with a guarantee that the market is going to keep going up, but it does increase the odds and give us more confidence that we understand what the market is doing. Okay. There is no FOMO up here at all, which is very important to make note of. If you're going to have a crazy strong trend day, like a giant elongated profile where it basically just goes up all day, you need both short covering and FOMO buying. This is all just short covering, really. And, a little bit of new buying, but it's not FOMO. They're not chasing price up. They're really waiting and waiting and waiting and getting in. So I don't think the market is going to go much further than the overnight high at this point, which is around 60.76. I think we're going to get there as long as we keep one time framing. I do think we're going to get to the overnight high, but I'm not convinced we're going to have some crazy trend day to the upside, which is what I was kind of thinking we were going to get this morning. This is much slower, so much less FOMO, much less chasing price. And so that just means, it'll run out of steam faster. Okay. So a little bit of resistance at 66, some resistance at 73. And then I think probably once we get above the overnight high, we'll run out of steam and start coming back down. Okay. Any questions for the pirate? Anything at all? Design Knob in the house. Good to see you, brother. Been a minute. He says, the market reminds me of a turd floating in the middle of a lake on a hot August day. Brother, no better analogy has ever been made. That analogy makes perfect sense. The turd, which apparently has enough, strength to stay together, despite the fact that it's floating around in a lake, isn't bothered by the heat because it's in the water. It stays cool. But it is still getting hit with the sun. So, like the market. DNK says, but it would liquidate if it was just short covering and not new buying. So there is new buying. It's just not FOMO, right? I'm really more focused on tempo, right? When people are chasing price, it just keeps going. You know what I mean? It's like you get above the opening price, pop, 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 and then you come down just for a second, and then you immediately start one time framing higher. That is not what we're doing here. So yes, we are getting new buying. It's not that really potent FOMO buying that keeps the market going all day long. So yeah, for now, it's still bullish and it's going to keep going up. I just don't think it's going to keep going for much longer. And by longer, I mean price wise. I think we maybe got another 20 points to the upside. And then this thing runs out of steam. John H. That's a hard fiber turd. Got to have that high fiber. That's what I should have called this channel. High fiber turd. Jay and Eric on the same Caddyshack reference at the exact same time. It's a classic. All right, well, seeing that the chat has turned into a turd conversation, I think this is probably a good time to say goodbye. As I said, I do believe this momentum is going to continue. Keep a close eye on the C period low in about 6 minutes once we print the D period, because if we do get cessation of the trend now, it could cause the market to sell back off into yesterday's range. So if the buyers want to get to that overnight high, they do not want to get cessation. They want to keep that D period low above 60.58. Okay, in 6 minutes when they print that D, and so on and so forth the rest of the day. Fighter pilot. Man, we got design top in the house. We got fighter pilot in the house. Man, this is the old crew hanging out. I'm almost sad to say goodbye. But we will see you all tomorrow morning. Thank you very much and have a great rest of your day. If you are enjoying these live streams, join the brigade. The link is in the description. We'd love to have you. It's only $20. Okay, bye.